Okay, episode 2 of the long-term perspective, institutional order flow. Okay, the old cliche saying, in the trading world, the trend is your friend, right? Is one of the very, very few general statements that's out there in the trading world that holds up, right? It's really very true, right? The trend is your friend, stick with it until proven otherwise. Our goal is to blend signatures of institutional order flow with narrative derived from anatomy of a candle, high time frame key levels, premium and discount, which we'll cover later. However, first we need to understand how to probe institutional order flow and what are signatures of bullish versus bearish price action, right? What does bullish PA look like? What does bearish PA look like? What happens in bullish price action? What happens in bearish price action? Okay, how to probe higher time frame bearish institutional order flow. In bearish institutional order flow, lows are being broken through and highs are being rejected. Up close candles are supporting price lower, and bearish FEGs are holding and bullish FEGs are failing. So these are the questions you're asking yourself to probe the high time frame order flow, right? So here is a bearish example. So we go from the previous monthly high gets run here. There's a high time frame monthly discount key level here. So we're probing the order flow here to confirm if it's bullish or bearish, right? So we can see every time we go above a short-term high, we're accumulating stops and then aggressively trading away as turtle soups, right? Going above highs and being rejected heavily. Those are signatures of bearish institutional order flow. Lows being broken through. So notice what's happening to the highs. We're rejecting them. What's happening to the lows? We're breaking through them. Short-term low here, breaks through it, right? Goes up, trades above a high, rejects the high. What does it do to the low? Breaks through it, right? This is bearish order flow until you get to an opposing higher time frame key level. Now we get to an opposing higher time frame key level. Sorry, just before that, order blocks, right? Up close candles are supporting price lower. Every time we trade into an up close candle, it supports price lower. Up close candle here, market trades into it, trades lower. Up close candle, respected. Collection of up close candle, respected. So up close candles are being respected, and that is a signature of bearish order flow. Fair value gaps, bearish fair value gaps are all holding price lower, right? So those four questions you need to ask yourself to determine the order flow, right? Are highs being rejected? Are lows being broken through? Are up close candles supporting price? Are bearish fair value gaps holding? If those signatures are happening, the market is bearish, right? Until we trade into a opposing key level. Okay, same thing when we're bullish. Are highs being broken through and lows being rejected? Are down close candles supporting price higher? And are bullish fair value gaps holding and bearish fair value gaps failing? So in this bullish run up, that's what we're looking at here. We close above this down close candle after we hit a high time frame key level. It starts to support price higher. Notice all the bullish imbalances here are supporting price higher through, right? Highs are being broken through, right? When we take out this high, it's broken through. You're not seeing a rejection from the high, right? This high right here, we trade through it from external, internal, then we break through it aggressively, right? This high, broken through aggressively. We then have a short-term low here. We go below the short-term low, what happens? We aggressively trade higher after running out the short-term low. This is signatures of bullish price action. Down close candle then here supports price higher as an order block after a short-term low is taken and rejected. And then we confirm an OB. Very strong bullish signatures in price. Trade higher. Then we have short-term lows. When we go below the short-term low, price rejects it aggressively. Again, short-term low, aggressively rejecting it. This is bullish institutional order flow. And when you're probing order flow, these are the questions you need to ask yourself. And this is how you determine whether the market is in a bearish delivery or a bullish delivery.